Welcome back to our channel where we dissect the juiciest bits of financial data into bite-sized, entertaining chunks. Today, we're diving deep into the world of the Procter Gamble Company, the household giant that's been keeping our shelves stocked with everything from toothpaste to detergent. Let's start with the basics, shall we? The price-to-earnings ratio or P ratio is like the heartbeat of a company, and for Procter & Gamble, it's been steady as a rock at around 26.12 over the past 12 months. But wait, there's more. Zoom out a bit, and you'll see that over the last 5 years, it's been dancing around an average of 25.27. Talk about consistency. Now, forward-thinking investors, listen up. The forward PR is a crystal ball into the future, and Procter & Gamble's got a promising 22.43 on the horizon. But here's where it gets interesting. The price-to-earnings growth ratio or PG is like the secret sauce of investing, and at 3.25, Procter & Gamble's got some flavor to spare. Remember that a value around 1 is when a stock can be considered undervalued. Now let's peek behind the curtain, shall we? Insider ownership is like having a VIP pass to the company party, and at 0.06%, it seems like the big shots are letting the little guys take the spotlight. But fear not, dear viewers, because when it comes to return on investment, Procter & Gamble is flexing its muscles. With a return on equity of 31.77%, a return on assets of 12.39%, and a return on invested capital of 21.31%, it's like they're printing money. And indicate how efficiently Procter & Gamble is using its shareholders' equity and company assets to generate earnings. Now let's talk cold, hard cash. Earnings per share or EPS is the name of the game, and at 6.41, Procter & Gamble is bringing home the bacon. But what about the future, you ask? Well, buckle up, because with an EPS growth forecast of 8.04% over the next 5 years, the sky's the limit. And speaking of growth, Procter & Gamble's been on a tear. With a compound annual growth rate of 4.75% for EPS and 7.22% for free cash flow per share over the last decade, they're proving that slow and steady wins the race. But wait, there's more. With a dividend yield of 2.45% and a dividend growth of 4.57% over the last 10 years, Procter & Gamble is like the Santa Claus of the stock market. And with 67 consecutive dividend increases under its belt, it's no wonder they call it a dividend king. Now let's pull back the curtain and take a peek at the engine that drives this behemoth. With operating and profit margins of 23.63% and 17.26% respectively, Procter & Gamble is firing on all cylinders. The plot thickens when we witness the good evolution of revenue and earning over the last 8 years. Despite this, Procter & Gamble's market price has not fully reflected this success, lagging slightly behind VO in total returns over the past 5 years. And when it comes to debt, they've got it under control with a debt-to-equity ratio of 0.69 and a long-term debt-to-equity ratio of 0.48. It's like they're walking the tightrope without breaking a sweat. Now let's talk about market cap. At a whopping $370 billion, Procter & Gamble is like the heavyweight champion of the stock market. And with an average price return of 3.61% over the last 52 weeks, they're showing no signs of slowing down. But what about tomorrow, you ask? Well, according to the analysts, the price in the next 12 months could reach $169.35, representing an upside of 8.53%. But hold your horses, because our magic 8 ball says otherwise. In my humble opinion, the fair value of Procter & Gamble is $145.10, suggesting a potential overvaluation. But hey, what do I know? I'm just a humble narrator in this wild world of finance. And there you have it, folks. A whirlwind tour of Procter & Gamble's financial fortress. Whether you're a seasoned investor or just dipping your toes into the stock market waters, one thing's for sure, Procter & Gamble is a force to be reckoned with. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing.